Welcome to the Explainer. So, if you've ever dug into a bowl of pasta at Olive Garden, or maybe celebrated a birthday cutting into a steak at Longhorn, you've actually participated in a massive economic engine. Today, we're taking a look under the hood. We are unpacking the financial machinery behind Darden Restaurants, using their fiscal 2026 earnings report to see exactly how they engineered a pretty incredible financial triumph. Right out of the gate, let's talk about a really crucial target, 10% to 15%. This is Darden's targeted total shareholder return, which basically combines their earnings per share growth with their dividend yield. But you know what's truly fascinating? It's not just the target itself, it's the fact that they actually hit it. Consistently, over their 31-year history as a public company, Darden's 10-year average annual total shareholder return has literally never dropped below 10% for any 10 fiscal year period. I mean, think about the economic cycles, the industry shifts, the changing consumer tastes over the last 3 decades. To deliver those returns through all of that requires a rock-solid foundation, and that's exactly what we're going to break down for you today. Here is how we're going to tackle this explainer today. 4 quick chapters. First, we'll look at the long-term playbook. Second, a winning brand portfolio. Third, the actual fiscal 2026 financial triumphs. And finally, we'll wrap up with the fiscal 2027 outlook. All right. Kicking things off with Chapter 1, the long-term playbook and the strategy behind the scale. So Darden operates on what they call a foundational long-term investment thesis. Basically, they don't just own a random collection of restaurants. They run a deeply integrated system. The real secret sauce here lies in their platform advantages. Because they're just so massive, they have access to incredibly deep consumer insights and a centralized supply chain. This means their whole portfolio of brands can perform way better together than they ever could on their own. They use really rigorous strategic planning and best-in-class operations, leveraging all that corporate scale to give every individual brand a massive competitive edge. It's like a giant, super efficient machine. Which leads us perfectly into Section 2, a winning brand portfolio. We're talking everything from those dominant anchor restaurants right up to fine dining. You probably recognize a bunch of these names, right? Olive Garden, Longhorn Steakhouse, Yard House, The Capitol Grill, Cheddar's Scratch Kitchen. When we sit here talking about billions in revenue and shareholder returns, it's so important to remember that these metrics aren't just numbers on a page. They represent millions of actual dining experiences. We're talking a ton of service, culinary innovation, and fun nights out happening every single day across the country. So how do they keep all of that organized? Well, Darden rigorously manages this massive portfolio by allocating their money, talent, and time based on some very clear internal categories. First up, you have the dominant brands, and these are all about highly durable traffic and steady unit growth. Next, they've got high-potential growth brands. Think Yard House, Cheddar's, and the recent integration of Chuy's. This is where they see a huge runway to open new locations much faster. And lastly, there are the balanced brands. These are your heavy hitters in fine dining, like the Capitol Grill and Ruth's Chris, where the strategy is all about capitalizing on opportunistic, high-end expansion over time. Let's zoom in on those 2 dominant brands for a second, because the scale here is honestly pretty staggering. By the end of fiscal 2026, Olive Garden was operating 949 U.S. restaurants, and together they drove an astonishing $5.6 billion in annual sales. I mean, that is a truly staggering amount of unlimited breadsticks. And Longhorn Steakhouse is right there behind them, with 618 locations pulling in $3.4 billion in annual sales. These 2 brands alone are the mighty anchors of the entire Darden ship. They have this incredibly broad appeal across all sorts of age ranges and income groups, and that is exactly what fuels the company's durable free cash flow. Moving right along to Chapter 3, Fiscal 2026 Financial Triumphs. Let's see if their actual execution met those sky-high expectations. Now, before we dive into the raw data, I want to share a quick perspective from Darden's president and CEO, Rick Cardenas. He recently said, "The fourth quarter was a strong finish to an excellent year, one in which we significantly outperformed the industry." He actually went on to credit the consistent day-to-day execution of their restaurant teams, pointing out that every single one of their brands delivered positive same-restaurant sales for the quarter. Honestly, that is a massive testament to those best-in-class operations we talked about earlier. And here is the hard proof of that execution, $13.21 billion. That represents Darden's total consolidated sales for the entire fiscal year. We're talking about a deeply impressive 9.4% increase over the previous year. Now, that growth didn't just come out of nowhere. It was driven by a blended same-restaurant sales increase of 4.5%, the opening of 43 net new restaurants, and, well, one other little calendar quirk that we're going to touch on in just a second. But hey, it's not just about top-line sales, right? It's about profitable growth. Let's see how this all builds down to the bottom line. Their adjusted diluted net earnings per share from continuing operations came in at $10.64. That is an 11.4% jump from the prior year. Listen, when a company with over $13 billion in sales can still manage to grow its adjusted earnings by double digits, that shows you just how effectively they are leveraging their massive scale to expand margins. Okay, as for that little calendar quirk I mentioned, fiscal 2026 actually included a 53rd week of operations, compared to the standard 52 weeks in the prior year. Now, this extra week organically boosted their reported performance, contributing an additional 2.1% to total annual sales, and it added about 25 cents to that $10.64 EPS figure we just looked at. Transparency here is absolutely crucial so we can truly understand their baseline data, but even accounting for that, it's a phenomenal year. And that brings us to our final chapter, number 4, the fiscal 2027 outlook. Let's talk about the payday and the future. Because here is the payday that investors absolutely love to see. Darden's strong operating model generates significant, highly durable cash flows. In fact, their CFO, Raj Venom, noted that they've delivered 9% annualized adjusted EBITDA growth since 2019. So what exactly do they do with all that cash? Well, they return it. The board of directors declared an 8% increase to the quarterly dividend, bringing it to $1.62 per share. And on top of that, they authorized a massive new $1.5 billion share repurchase program. This balanced approach to capital allocation perfectly aligns with their long-term framework to just continuously drive that 10 to 15% total shareholder return we talked about at the very beginning. So what is the playbook for next year? Well, here are their transparent projections for fiscal 2027. They expect total sales to climb even higher, projecting between $13.6 and $13.75 billion. They're also planning to aggressively expand their footprint, aiming to open 75 to 80 new restaurants. On top of that, they are targeting a same restaurant sales growth of 2.5% to 3.5%. And they plan to do all of this while navigating an anticipated total inflation rate of approximately 3.0%. They clearly have a roadmap, and given their historical track record, it certainly seems like they have the operational rigor to execute it. So, we've seen the historical consistency. We've explored the immense, industry-dominating scale of brands like Olive Garden and LongHorn, and we've unpacked the massive $13.2 billion triumph of fiscal 2026. But look, the restaurant industry is famously unforgiving. So, I leave you with this question. With a new $1.5 billion share repurchase program locked in, but a stubborn 3% inflation forecast on the horizon, can Darden's centralized platform advantage continue to shield its brands and maintain this multi-decade winning streak? It is going to be absolutely fascinating to watch them execute in fiscal 2027. Thank you so much for exploring this with me, and I'll catch you on the next explainer.